There appears to be no end in sight for the current oil price rally or for the bullish catalysts driving it as tightening supply combines with the apparent return of Chinese demand growth. WTI crude futures strengthened above $90 per barrel on Friday, scaling fresh 10-month highs amid an improving global demand outlook and tightening supplies. On Thursday, China's central bank cut cash reserve requirements for all banks to boost the country's economic recovery, lifting the demand outlook in the world's top crude importer. Growing expectations that major central banks are nearing the end of their tightening cycles also aided sentiment further. With Chinese refinery runs reaching an all-time high in August at 15 million barrels per day, China has transformed from an underperforming bearish factor to the largest bullish upside for oil prices, lifting demand optimism despite both Europe and the United States struggling with refinery maintenance. On the supply side, OPEC, the U.S. government and the International Energy Agency all predicted a market deficit in the fourth quarter due to extended supply cuts by Saudi Arabia and Russia. Saudi Arabia and Russia said they would extend their oil supply cuts until the end of the year. What was unexpected was the length of the extension. It implied that the major oil producers within OPEC Plus were no longer engaging in games, they were determined to secure higher prices and were ready to take action. This development further strained the delicate thread upon which U.S.-Saudi relations depended. The Saudis currently lack significant support in Washington. There is certainly a possibility that they could be singled out as the prime example if Washington seeks to assign blame for rising fuel prices or a sluggish economy once more. Given China's consistent demand and the prevailing supply constraints, the outlook for oil prices remains bullish in the short term. However, key central bank decisions worldwide could introduce some volatility in the markets. As I mentioned in the last crude oil forecast, WTI will attempt to settle above the resistance at $87. If this attempt is successful, it will head toward the next resistance in the $90-$93 range. And this is what actually happened this week. Meanwhile, there is some insider information suggesting that Saudi Arabia and Russia are targeting the $90-$110 price range. If it is true, I would expect oil prices to stabilize at $100 either by the end of this year or early next year. Thank you for watching. Please don't forget to hit the like button if you enjoyed the video. See you in the next one.